We are fundamental, growth-oriented investors. We're focused on identifying fast growth companies that can contribute to future performance of the fund. Our stated philosophy and the way that we achieve this performance is looking for companies that look extremely cheap on our view of earnings or free cash flow looking out between 3 and 7 years. We spend all of our time as investors trying to figure out what the earnings power is looking out that far, which we think gives us a different time horizon than many other investors in the market. We tend to try to construct a fund where not all the stocks in the fund behave the same way. So we think about the fund using many of the same risk metrics that you would hear about from other investors, but we also try to bucket our ideas into different themes. We have 3 key buckets across the fund. The first is strong long-term growers. These are the stocks that would look the most similar to the growth index. They tend to have relatively high revenue growth, maybe something in the mid-teens. They tend to be profitable companies, in some cases with actually very high margins, and they tend to trade on earnings, PE multiples, even if those multiples are somewhat high because these are great businesses. Ideas that would fit into this strong long-term grower bucket would be stocks like Microsoft and Nvidia and other big index components. In addition to those core ideas that you'd also find in our index, we have 2 other types of ideas. The first is the very exciting breakthrough growth story bucket. These are stocks that are often undiscovered by the market. They may be operating in very large markets, growing fast, but often they're not profitable yet. So we're watching for the growth that we see from the company. We're trying to underwrite the size of the market that we anticipate, and we're waiting for these companies to turn profitable over the next couple of years so that they still look reasonably valued on our view of earnings looking out. The other bucket is the resilient growers bucket. These are slower growing businesses that tend to operate in more mature industries. Examples would be telecom operators or electronics manufacturing suppliers, businesses that may not have as exciting of growth on the headline as some of the other buckets, but we think the combination of strong growth, often better than their competitors if we own the stock, and compelling cash return can still drive good performance for these stocks, and they give the fund ballast during periods of volatility in the other 2 parts of the fund. Thank you.